Okay, so just a quick update on the situation that we have at the moment on silver. Now, what do we have? We know that the market basically from a daily perspective has found support at this previous resistance. So we have a previous resistance level which has now turned support, which the market is basically respecting quite aggressively. So this previous resistance turned support holding quite nicely. If we look at what is the situation from a weekly perspective, we can see that the market basically has created this very nice impulse to the downside, followed by a first move up, move back down, break to the upside. So this level here is support both from a weekly and from a daily perspective. So very important structural level which is holding. Now, until the market will stay above this support, we can't be looking for possible short positions, even if from a weekly perspective, we would like to see the market try to basically start a new impulse to the downside. Doesn't mean that the market will make it to basically create a new impulse to the downside, but at least we would like to see the market try to make another move to the downside. Now, if we look at basically what is the possibility if the market will not break to the downside, it appears very clear that this is the next very important structure level that we have to be looking at from a weekly perspective. If the market will make it to here, then definitely from here there is the possibility to be looking for a very nice short position. But that is something that we'll be speaking about after the market will have actually reached that area. Trading is reactive, not predictive, but immediately we have basically two important levels just by doing this simple analysis that we know that we have to follow. Now, just one thing that we have to check from a weekly perspective. If we take our Fibonacci from the high to the low of the impulse, we can measure the retracement. And what we can see, it seems like this weekly candle will close back above the 0.618, aka the golden ratio. If this will happen, then definitely we can expect the market to go higher. But anyway, let's not try to predict the market. We already did our job because we already have two very important structure levels that we have to monitor. So if the market will continue higher and reach this very strong resistance from a weekly perspective, what we will be doing with students, first of all, we will check the COT data and see what kind of situation we will have from a silver perspective. If hedge funds during this move to the upside will have been basically reducing their longs and adding shorts, then definitely what we will be doing instead of this area, we will be looking on the 4-hour time frame, waiting for the market to shift from a bullish market to a bearish market, and after the market will have provided one of our valid entries, we will be taking this nice short with a very good risk to reward and good probabilities for a move to the downside. On the other side, if the market will first, before basically reaching this area, break this structure to the downside, then on the retest of it, what we will be doing with students, we will be monitoring price action on the 4-hour time frame inside of this area here, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries, then we will be taking this nice short with a very good risk to reward and good probabilities for the start of a new impulse to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.